Adani Group stock. So there's Adani Power, Adani Green, Adani Total, Adani Ent, all of them, which are some of the gainers that you're seeing at this point. Now, one of the reasons, of course, is this, the SEBI clean chit, which has come in, and the last of the Hindenburg allegations have been put to rest. There's a very clear statement from Gautam Adani on this as well, which is why you're seeing this move. On top of that, there are fundamental reasons as well why you're seeing a breakout in the stock. Adani Power, for example, we played out what Morgan Stanley has said, and they've initiated an overweight on Adani Power. That means they want to increase, they recommend increasing positions on this particular stock. In fact, I'm going to go to Dharmesh Kant on that, and let's talk a bit about Adani Power fundamentally, of course, with the tailwind of the SEBI clean chit.
Yeah, definitely. I mean, it's one of the valuation-wise is also cheapest, and as the report is stated, and we also discussed it, that is the largest IPP player in the thermal segment of, as far as private players are concerned. And second to, NTPC, the recent megawatt wins has been quite good for Adani Power. And they have coal linkages. I mean, the entire history has been clean, and now they are moving forward with good operating profit margins. So the only concern would be the debt part of it on the balance sheet. And I think sequentially, as you get the cash flows in place and working capital management in place, and you will have a good, debt reduction as well. And the PPAs, which has been signed, 2 PPAs at around 6 rupees per kilowatt hours and 5.58 rupees per kilowatt hour, 5.83 per kilowatt hour. That's a good price to, enter into a PPA for, 20-25 years. So I think on the overall scheme of things, with coal linkages in place and international coal prices are anyways, at multi-year lows, so that also a tailwind to the company. Going forward, this looks to be a good value buy. So 30% is what Morgan Stanley is saying. But to my mind, if things roll out the way it has been for next 2-3 years, it can be far higher. It can even be a multi-bagger developer from here on.
Since we're on the subject of the Adani Group companies, and Kush has already pointed out that among the pack, he likes Adani Enterprises as well as ports. So I want to talk to you about the former, because ultimately you're talking about several key industries. You're talking about Adani New Industries, which makes those photovoltaic cells for solar, and you also have hydrogen. You have the airports business, which is in focus, and city side development, which includes realty and hotels and everything else that comes into that. What do you think about Adani Enterprises at this point?
Yeah, definitely, Alex. I mean, Adani Enterprises is more of an incubator kind of a company, which various, business falls into. Data center is one which you missed out in the entire list of things. That is also, they are pouring very aggressive. And as far as renewable energy, solar cell module and cell manufacturing is concerned, I think they are the first one to have an ingot also in place. Others are now getting ingot manufacturing here, and polysilicon. So right from polysilicon to ingot to wafer to cell manufacturing to solar module, entire thing is the basket. 10 gigawatt is what I think has been commissioned, and by next year they are planning to have 10 gigawatt more. So a very aggressive play on all the baskets, all the new energy concepts. So valuation wise, it becomes always very difficult to justify, because many of the businesses are still to unfold to the fullest capacity. I mean, airport business can again be a big, tailwind to the entire, revenue source. So, if you are constructive on the company, want to stay invested for 3-4 years, have a long-term call, have a 4-5 years kind of window horizon, then definitely it's a very good company to hold in your portfolio with many value unlocking verticals in the offing.
And that should be true for almost any investment that investors make, right? Keep it for the long term. Don't try and do it for the next 3 to 6 months. But I tell you, while we pointed out Morgan Stanley on Adani Power, there's a Jefferies note on Adani Green, wherein they have given a target which is 33% higher than the current market price, talking about how capacity should be raised or will be raised 3.5 times, guys, from 14 gigawatts in FY25 to 50 gigawatts by 2030.
So we have to look at what you're seeing with the stocks this morning from a couple of perspectives. There was a sort of a headwind holding back of a breakout on the stock prices because this was still hanging fire. And of course, some commentary since this morning that this was expected, there were no facts to it. But till you have that order done and dusted from the market regulator, there's always a bit of, okay, let the order come in. Now, the last of those headwinds have cleared, which is why you're seeing this kind of a move. What would be your top pick from the group stocks, Kush?
So once again, Adani Ports and Adani Enterprises. But that said, Adani Power is dancing to its own tune. I mean, this is one stock that has actually done well, could continue to do well. So now, this is one stock that if I get on declines, I would be keen on buying. But right now, Adani Ports and Adani Enterprises make the cut. If you have, continue to hold, maybe partial profit booking, but you don't want to let go.
Okay. Okay, well, that group stocks will be in focus today, but let's see how the markets are starting off this Friday morning. Flat, absolutely flat. Very quickly, mid caps and small cap indices. Very quickly. Let's get mid caps and small caps, and then let's get the heat map on the screen. It's a flat market, but let's get the heat map up on the screen. Watch out for the Adani twins here. 3.5% up for Adani Enterprises, 1.5% up for Adani Ports. This has been the most stable one, right, of the pack. So not as high beta as maybe some of the others, but doing very strong. Maruti, 0.73%, IndusInd Bank, Hero MotoCorp are amongst the others. On a flat day, even Stevens for the gainers and the losers. What's losing out? Mahindra & Mahindra, ICICI Bank, Bajaj Finance, and a few others. But that's the long and short of it, really. And as Tamanna walks in, we should keep a special eye out for the Adani Group stocks. And if we can just pull them up one after the other, just to show you the kind of gains that are happening there, right? Enterprises 4%, Ports 2%, Adani Power 8% on that Morgan Stanley note.
Oh.
And this list, Tamanna, looking very strong. Total 9.67. I mean, it's green across.
So, you know what has been happening, Neeraj, and I think important to understand that since the Supreme Court order, some of that overhang of what Hindenburg has done has lifted. But if you look at the kind of hit which came not just to the group stocks, but as a result to Indian equity markets in January of 2024. Since then, you've seen a slow clawback because you still had some regulatory processes which were going on in India from the courts, from the regulator, which is SEBI.
And that is behind you now.
Now that is behind you. So now you can see the breakout. And as we've been saying, Adani Enterprises should also be seen in the context of the Navi Mumbai airport opening. And that is why you're seeing a 5% move. I think it's rare to see such a sharp move on an Adani end. Adani Power continues to be a favorite. Ports, of course, on top of it. Let's just take a look at what's happening to the markets as well this morning and pull up for you the sectoral indices, and then we'll go, of course, to what's happening with mid-cap and small-cap. Up in the green on mid-cap, 150. And of course, mid-cap, the small-cap 250, slightly in the red. Even the Nifty and the Sensex seeing some pressure, but this morning is all about Adani stocks, I have to say. That's what's moved up the Nifty. Energy, metals, those are doing okay. Banks and finance, not so great this morning. The Nifty Auto also seeing some pain, although you have some pops from a Maruti and an M&M. Let's pull up the top gainers and losers in the broader markets and from the list of 500 stocks, the BSE 500. This is showing you the full picture. Dominated completely by one group company. And of course, standard disclaimers here. Adani Total now about 11% up. Adani Power moving through. There's a lot happening also which hasn't been priced in by the markets yet. So you should see it in that context. For example, data centers and the moves there, not really priced in. What's happening with green energy, not really priced in. What's happening with airports, not really priced in. Maybe you will see that coming through right now. Adani Ports relatively well covered, but yes, the top line completely dominated there. On the losing side, in the very, very early hours of this morning, you would see pullbacks. Companies which have been buzzing, so a KNR Construction, a DCM, Shriram, all of them have been buzzing the last couple of days, and you're seeing a bit of profit booking happening there more than anything else. Overall, I think markets fairly decent, nothing to panic about, but the story this morning really not the broader markets, it's all about Adani Group stocks.
Said it, Tamanna. In fact, I'm looking at the Nifty 500, which is effectively an index that constitutes 500 stocks, and it's a broader gauge. So it kind of gives you a better picture of how the broader markets are doing beyond the Nifty 50. And if I look down the list, the top 5 are Adani Group companies. And if you look at the breadth, right, which is how many declines and how many gainers, you have 208 out of the 500 that are gaining and 293 that are losing. So some part of what Neeraj and Tamanna spoke about is being reinforced in the first few minutes of trade, where up till yesterday, you had 10 out of 11 sessions where the Nifty 50 had gained ground, the benchmark had gained ground. And there's just a little bit of money being taken off the table. So if you look from the 29th of August, actually, you've had a gain of 1,000 points for the Nifty 50. And so a little bit of profit taking is really par for the course. And that's something that you're seeing across the board, even in the broader markets. So if I look down the list among the losers, you have something like an Acme Solar, which is down about 2.8%. You have Zen Technologies, which was up and about in the recent past, which is down about 2.3%. DCM Shriram, Godfrey Phillips, Sonata Software, all losing about 1.6% or thereabouts. Not the biggest losses per se for these stocks either. And by the way, the volatility index, something that you should track very closely to give you a sense of how the volatility in the markets are. This is very, very benign at less than 10. That measure, in fact, I'm going to come to Kush Bora to talk about this, because this is something that you should keep a watch of, even if you are a long-term investor, because it can provide you with a sense of how near-term markets are likely to perform. So, in fact, I'm going to make an exception today, since the biggest talking point is the Adani Group of stocks, and we've spoken about it for a while. Let's talk about the volatility index.
Very, very well spotted, Alex, and I think this deserves a conversation. The reason being, Monday I spoke about this, that we were around 10.5 levels. Now, and I'll reiterate the same thing. If VIX were a stock, this would be an exceptional risk-reward ratio to go long on VIX. And now we know that the markets have an inverse correlation. So if the VIX spikes, there's a probability that the markets could consolidate or even correct. VIX does have a tendency to stay, in a band for a very long time. So we've seen instances where VIX has stayed in a range of about 10 to 12, 10 to 13 for 4, 5, 6 months as well. We've already seen a couple of months of VIX consolidation. When does it break out? Very difficult to pinpoint. But we know if it breaks out in a big way, and usually that happens when there is some sort of an event. Could be anything, almost like a black swan, so very difficult to predict what event would trigger it. So this is the reason I always have Nifty, Bank Nifty, Sensex, and then VIX, so that I have a very keen eye on what's happening with the VIX. I will be a little concerned because too low is also not a good thing on VIX.
Yeah, and it's certainly very, very low right now. But bear that in mind. That, sorry, Alex, you want to make a point?
No, please go ahead.
Okay, fair call. So, well, opening thoughts are out. From the point of view, Kush, let's say that the defense names and the IT names have had a good rally, and today a bit of a pause, particularly in IT, but maybe in some defense names as well. Would you take money off, or would you keep a slightly deeper stop loss?
No. I would actually look to accumulate defense stocks. I turned constructive on defense about a week or so ago from when they started actually moving higher. Prior to that, 2.5 weeks, there was consolidation, there were key support levels, and there was volume accumulation very clearly visible. But that doesn't turn into a call unless you have a follow through in price, right? So some of these names like HAL and BEL, by the way, my top picks as well, had a very good move last week, in terms of price action. If they cool off a little bit from here, it's still a good entry point. Even now, from a risk-reward standpoint, they make a very good, a very good positional bet. So if you want to consider HAL, BEL, these are two stocks. Very similar view on IT. However, I wouldn't paint everything with the same brush there. 3 stocks in IT: Infosys, Mphasis, and Coforge. These 3 stocks are something that you should keep on your radar. Any kind of dips should be taken as as an opportunity to enter. But remember, these are more positional bets, 1 to 3 months out.
Okay, so those are picks in the IT space. And by the way, Dharmesh has already given you picks in the mid-cap IT space. Dharmesh, I'll ask you to reiterate just the names so that people know what you're talking about, and whether or not you would have a buy rating on any of the large cap counters. If so, why?
Yeah, like as far as the mid-cap names are concerned, it is Tata Technology, Persistent System, Coforge, and KPIT Technologies. These are the 4 players which is engineering research and development from a software development services. We have a buy rating on them. As far as large cap ITs are concerned, I think it's still not very clear how much they have been able to adapt to new products of AI-driven or AI-led products. So there's a lag behind that, and I think the BFSI spends which are likely to come through in the US may not be to the product suites which these companies are having. So we are avoiding them for that reason. And one more thing, Kush, I'm just 2 kilometers away from where you are right now at BKC Naman Center. So you can drop by after the show or you can call me up and you're treat on me.
Next time you will come to our studio. Now that you've told us you're just 2 kilometers away, then you should be sitting here with us next time.
But then he'll have to give treat to all four of us, and I don't think Dharmesh would mind that.
So we can also join in the treat. Okay, just quickly, speaking about NetWeb. Now, this is something that has been in focus since, I think, early September, early this month, about 2 weeks odd, ever since they bagged that order with NVIDIA. And I just want to pull up what's happening in the 1 month chart as well for NetWeb, up again today. Dharmesh, we have such few AI plays. Look at the price in the last 1 month. It's a 65% uptick. We have such few very, very clear AI plays. Is NetWeb Tech a good bet even right now after the 65% run-up we've already seen in the stock price?
See, in the short term, it's very difficult to justify the valuation price, but business-wise, they are getting traction. And these are the players who are very, fungible kind of a plays. They can easily adapt to new AI models, which their larger players want them to develop. And that is where they are assisting. Latent view analytics is another case in the point where, again, a pure AI kind of a model. So, if you are having that faith in the company that things are going to turn out well, which we do think that's likely to be the scenario for all these mid and small cap companies which are into AI platforms, because the fungibility is quite high and speed is quite fast for them. So continue holding it, and valuations for next 2-3 years, it will be very difficult to justify the valuation multiples, but that is how the AI play has been. So that's the take there on it.
A stock that I had looked at this morning, Dharmesh, Metropolis, it's not moving too much. It's just about flat to marginally positive. They've made a small acquisition in the Maharashtra region where it seems to be that their ongoing strategy is to acquire some of these local players to bolster the strength. They call it a string of pearls strategy. I wonder what you think about this counter at this current valuation. They say that they have 40% of revenue concentration in Maharashtra, and that's why they've made the acquisition. Would you buy at this point?
I think this kind of, this is the way forward, inorganic route for most of the players in the space is likely to pan out that. And diagnostic space and Path Labs, basically it has been a story of merger and acquisition by the larger players and more of an unorganized moving to organized, and that is likely to hold. So again, if you are a steady state kind of a player and you want to have a portfolio of, say, diagnostic player 2-3 as a basket play, then Metropolis, Thyrocare, these can be added in the basket and can be held on. Just one thing one should be mindful of, expect, decent kind of a returns, 15 or 18% kind of annualized CAGR return on the stock price multiples, because 15 or 14% is what the profitability will be. So they will run in tandem with the profitability growth, and they won't have a high beta, valuation run rate from here on. So, but that's the caveat. But yes, again, a sustainable, good fundamental play on all this Path Lab basket put together.
Okay, I'm just trying to see what else on the BSE 500. What is aside of the Adani Group stocks doing well has managed to wedge in. So Divi's Lab, for example, is out there amongst the top 10-15 names, which is a non-Adani Group stock. Then there is a JSW Energy, which has kind of managed to squeeze in there. Tanla Platforms and FDC. I think there is a Reddington as well, which is up about 5%. So Adani Total, top of the pile. Adani Power, right up there. Enterprises now 4%. Energy, Green, Adani Ports. And then between all of that, FDC, Reddington, JSW Energy and Divi's Lab. Now, both JSW Energy and Divi's Lab have gotten brokerage calls today, which are constructive on those stocks. Kush Bora, do they look good on the charts for a trade, or would you avoid them?
No, so Divi's, from a positional standpoint, perhaps not from a momentum trade perspective, it's got near-term resistances. So I would perhaps look at it from a 6 to 12 month kind of a horizon. Not now. JSW Energy, yes, it's had a long period of consolidation, 3.5 months breaking out now, 4 sessions above the 200-day moving average and gaining ground. Very healthy. So higher targets of 575, 595, very likely. Supports at the 525 mark. So this is something that's very interesting. And just a quick word on Reddington. When the stock, 3 sessions ago had that big 20% up move. This is exactly what we spoke, that you don't need to book profits just because the stock is up. Continue riding that wave, and from the 285 levels, the stock is now up to 305. I would suggest a partial profit book, but don't let go.
Okay, what a move it has been for Reddington. And that's the beauty of the markets, viewers, the last few days, that we've had the market rally, yes, but a clutch of individual pockets have been serious wealth creators. I mean, Reddington is a case in point, right, Alex? Just the ferocity of the up move and then the continuation. Beautiful. And that's what these times are made of, that you latch onto a stock, and if the fundamentals are in place and the valuations are in favor, the gains can be very good. This is the intraday chart of Reddington, but if you look at the 1 month chart, you'll see a phenomenal uptick there.
Yeah, and there are, so especially in the context of you not being in earnings season, and so the paucity of news flow, there are a few pockets, as you've mentioned, where the news flow has been pretty dramatic, and so therefore the uptick that you've seen and the sustenance of that uptick has been quite sharp.
Yeah, maybe trade with stop losses as opposed to taking money off the table on stronger names. It's just that kind of a market. This is moved from sell the rise to buy the dip kind of a market currently. So be mindful of that. But take a moment, Kush Bora, Dharmesh Kant, for joining you today. Really appreciate your time and have a great weekend. But we move to IT, because IT is that big talking point, right? With the US Fed trimming rates by 25 basis points. What could this mean for LTIMindtree's growth and client sentiment? I put that question to Venu Lambu, CEO and MD of LTIMindtree. Listen in. I'm guessing that this couldn't have happened at a better time. We are talking a day after the US Fed has cut rates, signaled to more. In fact, the dot plot suggests another 175 basis points of rate cut. I mean, how does that mean for business spends and business confidence in the US, and thereby for your business, which has got a large exposure to the US geography?
Look, I think it was long waited, if I may say. So obviously, it's in a positive direction for the business overall, especially when you look at the historical commentary on discretionary spend has been a bit muted. So we'll have to see how that aspect of it unfolds with our customers as we go along. But outside of this, there are still areas where growth does exist. If we remain focused and if we reorient our capabilities towards the new growth areas, there are growth pockets which we can capitalize on.
And just trying to understand, what is your sense of the kind of business optimism that there exists in key clients? Because I remember the first couple of quarters, I mean, I didn't speak to you, but a lot of your peers that I spoke to, there was, not in a negative way, but there was uncertainty about not knowing when is it that client confidence would return, etc. Are conversations still the same, or are they changing?
Look, if you look at our, part of the commentary, we had a promising start for the year. We had a good Q1. And, as part of the commentary, I said that, there are opportunities in vendor consolidation, which are translating into very large deals. We announced one of the last deals in the Q1, and I did mention about announcing another one very, very soon, and we are in that process. And the vendor consolidation is a big theme. The second is AI is at the core now, right? It's no more at the fringes, it's at the core. So there are investments happening in AI, and we are seeing a significant traction on AI native projects, as well as how you infuse AI into our existing capabilities. And the third one is about, I think there are still clients who have withheld some of the modernization projects so that they get ready from an AI perspective. And we see, depending on certain sectors, we see that there is some movement in that area. But as far as our commentary was at the end of Q1, I said, I'm reasonably confident of continuing our growth momentum. In fact, I went ahead and said that at some time in the second half of the year, we would like to see higher single digit or very close to the double digit year-on-year growth coming back to us, and also spoke about the margin enhancement for us. So, so that's how we are seeing. But it's extremely important that we remain focused on the core areas that we want to focus on, and also get fit in terms of our competitiveness, cost, and everything. And we're doing a lot of things around that area.
So you are on track for double digit part one for the current fiscal, and could the Fed rate cuts and if there is enhanced US spending aid to that number?
Well, it's too early to call out that what impact it has, but our plan of reaching very close to the double digit at some point of time in the second half of our financial year is pretty much intact, and we are on that track for that.
Okay, fair call. No, the reason again I kind of push this is because almost everybody says that in the current macro environment, because Mindtree, let's say LTI Mindtree in the last 2-3 years, relative to some of the high growth companies has not done that. They're saying they're waiting for the evidence of the growth. What you are effectively saying that if you reach the double digit for the end of the year, and therefore the annual growth numbers could also look large, you kind of signaling to the street that you are in the top percentile or the top quartile of the growth band across companies.
Look, we focused on three things when I, started, my new role, right? One is about how we transform our sales organization to be very competitive and to make sure that we have enhanced productivity, we cross-sell, upsell to our accounts. That's a work in progress, and that's seen some good results. And there was a big focus on the large deals. And I mentioned about one large deal we announced officially, and there's one more we are working on, which I'm hopeful that we will announce it very soon as well once we cross the process part of it, right? So that part of it is going well. Second is we announced Fit for Future, which is about rebaselining our cost and getting competitive in our operations. And, that was reflected in the margin that we delivered in Q1. And we also went about and said that you can expect 100 basis point improvement on our margin over the next couple of quarters. And again, I'm reasonably confident of sticking to that commitment on that. And, if we continue all that, I don't find a reason why we would be very close to the higher single digit or very nearer to the double digit at some point of time in second half.
Well noted. And no.